Hello, this is Javier Baez, and in today's video we're going to show how the Elliott forecasting indicator and the Elliott oscillator is helping us in our daily trades. These indicators are specifically programmed with the option trader in mind, but with that said, we first have to go through a legal disclaimer. Please be aware that trading is risky. We're not responsible for losses, option assignments, substantial loss of capital, option exercise, margin calls. We have no responsibility whatsoever in any financial decision you make. The following videos for educational purposes only, based on indicators that are programmed, which we use as guidelines for our own trading. Please consult with a financial advisor if you're unaware of the risk, rules, obligations of trading stocks, commodities, and options. With that out of the way, we want to go to today's day. It's been a good day so far. The market is going to close in approximately 7 minutes. This is a tool that I started using this week, which was done by my good friend Don Fishback. It's called compression for options. It's called ODS online. So it uses the probability model to show essentially what are the probabilities that an option expires. What I really like about this tool is that it shows you which date you're trying to forecast. Here, the day started today with a very good news that the jobless claim dropped 202,000. Just to give you an idea of how good this report is, if we see this report all the way back to 2008, we're going to see how bad it was 10 years ago. So this is the economic crisis of 2008, and we can see that it reached a high of 665,000 jobless claim. That's a lot of people without jobs, and you can see that today's report is very exciting because that means that our economy is doing great. I think there's a lot of changes at the end of last year. This could be people getting laid off because the budget or the yearly target didn't get there. But look at what happened. Today it's almost in record lows. We would have to go many months back just to see when it was this low. But that should corroborate the fact that the economy is doing extremely well. With that said, if we check the news today there's not a lot of news, not a lot of, if we check the indices, there's very little movement. We see a lot of movement in Brazil and Mexico, but then on the other places, specifically in Europe, it was a negative day, a bear day, and then in the United States, it barely moved. So this is one of those days where there's not a lot of news. Amazon Bezos just announced that his divorce ended up giving his wife roughly, I believe it was like $20 billion, but now the $80 billion that some stock people expected. He still is going to remain a powerful guy in Amazon after his divorce. So why do we like checking news? Me personally, I'm not a news guy. I've never been glued to the TV, but since I started trading, this is part of what moves the market. It's not the only reason why the market moves, but let's say Amazon would have a horrible, nasty divorce. We could expect a really bad day tomorrow, but I believe Amazon is going to, according to the Elliott forecast, is going to close between 1,823 or 1,799. I like trading with 2 time frames just to know we have a different set of indicators here, and the Elliott indicators that we have, what it does, it shows you where are the peaks and throws, and this is really useful. You can plot different the peaks and the throws here. I don't necessarily like doing that on intraday. I like doing that for end of day, and then we have a different sensitivity for intraday. But the important thing about this is that there's a lot more green today. If we go back to the 2-minute chart, there's a lot more green today than red. So I think there's some momentum. We believe it's going to go up, and I really enjoy trading knowing what's happening in the intraday, and that will allow me to forecast better. But right now, tomorrow, it's still going to be a negative day. It's staying in this level for hours. Like I've been checking these stocks since 7 a.m. in the morning. The reason why I trade Amazon a lot is because the options are extremely generous. They pay you a lot of money just to do simple options, so you can make 4 times more money than other stocks. It's also substantially more risky. I like using this software TC2000 to show me exactly what is my level of risk. As you see, I can lose tomorrow up to $1,627 if it goes up or it goes down. The reason I'm willing to take this risk is because even though it's a bad, I can lose a lot of money here. What I like to know is the probability of Amazon reaching these prices. So all I have to do is using the LVDS compression tool. If I check what is the probability of Amazon hitting 1,847, the probability here is 4.79, which is higher than the median. So I was aware I was taking a little bit of risk. However, the Elliott forecast, it's telling me that tomorrow, and I do believe that tomorrow it might be very difficult unless it gaps up a lot during pre-market, which if we see the 2-minute chart, I don't see enough momentum. If we see the volume here, there's a lot of selling around this price, 1,818. There's a lot of selling here. So all this amount of sales, I think, will prevent the stock from going way up. This is the point where we lose money. And the way when you trade options, it's extremely important that you act fast. It's different than trading stocks. If you trade stocks, if the stock is going up, then you're making money, assuming you're long. If it's going down, you can hold on the stock forever and ever and don't lose money. In option tradings, if the stock is going up, you have an obligation to sell 100 shares of stock, and that is absolutely horrible. So your job when you're trading options is to make sure you run away with 2 things: with money in your pocket if you close the transaction, or with a loss that, even though it's a loss, I would rather lose $115 here than lose $1,000 a day later. So if you do get a sign, you will lose a lot of money, and that's the risk of trading options. It is a risky profession. It's not easy, it's not simple, and that's why we have so much technology here, just to make sure we understand what we're doing. Now, potentially tomorrow, if Amazon for some reason decides to gap up 35 points, will be Friday. It will go up to a point where we will lose a lot of money. So we have alarms, and this is part of trading. This is the medium. So right now it's exactly where we want it to be. We placed this order earlier today. If we see the executed orders, we started with this iron condor maybe a few hours ago, and then if we check what we did with Amazon today, we sold this one about almost an hour and 30 minutes ago, and so far that trade has gained $44. So in 1 hour and 44 minutes, we have profited $44 already. And considering the fact that we sold this for $137, I would say there's a very high probability that this will expire worthless. Now, we do have a loser for this week, which is Lyft. For some reason, I thought buying shares of Lyft was a great idea. And this is part of trading. It doesn't matter what kind of indicator, what kind of technology. You're going to have every single indicator in the universe. You will lose money, guaranteed. There is no trading in the world that only makes money. the main thing that I want to do with this series of videos is to explain when to get out. Trading options is not a part of the market that you want to be. You want to make mistakes, especially if you're trading options for stocks like I'm trading. These stocks are worth almost $2,000 per share. So you can imagine the amount of money I can lose if I wouldn't have this software, if I wouldn't understand my risk. Assuming tomorrow I'm completely away from the keyword and Amazon jumps to 2,800, I'm never gonna lose more than $1,600, which it may sound like a crazy bad deal, but if we check what we made this week so far, we've made $592.64, and today with Amazon we made $76 already. So today it's been a green day. We've made $185.50, and this month we've made $592. Here's the forecast for this week. This week we hope to make $808.57 in profits, and that's the beautiful thing about options, and that is why this indicator was specifically programmed with to help option traders understand what is the level of risk. Now, I'm not saying this is not a good tool, because I do believe this is a nice tool, but I have a little bit of trouble understanding what should I do. Should I trade iron condors or what? And even though here there's another part of this website that tells me strategies, I like this indicator because it tells me in real time if I'm winning and where the stock is going. For example, with Google, that's another trade that we have. Today was a completely bullish day. So this one I'm a little worried, but the Elliott forecast tells me that it's not going to go above 1,221 cents. Now, this indicator, I'm going to make it better in the next couple of weeks, because I'm going to include more calculations. But with this indicator, if we check yesterday, just to show you guys how accurate it is, I have a lot of confidence in this indicator. Yesterday, the forecast was $1,211.81. So essentially what this thing says is that today the highest value was $1,211.11, right there. And then the highest value was only $4 more. So it stayed within the range. It beat the expectations, not a lot, by a little bit. So essentially, and then the lowest value was, the forecast for the low was 1,195, and the low was, was $10. So this tells me that it beat the forecast by roughly, $7-10. So if I'm careful, which I have to be, even though the Elliott forecast, it's forecasting 1,221, I'm going to add $10 more here, $7 more. So I think in the worst case scenario, Google might close here. I would still make money, but at some point that's too stressful, because this trade, it didn't even pay that much. It paid $45 for the puts, and it paid roughly $90, not even. So in order for me to stay on this trade, I have to make sure tomorrow the forecast is not showing. Here's, like, I can lose a lot of money with this trade. So the bad thing about, the negative part about trading options, though, even though it's exciting, trading based on what could happen, it's risky. And that's the reason why this indicator is explicitly designed for option traders. So if tomorrow, let's pretend Google is, the market just closed 7 minutes ago, but look what happened in the last few minutes of the market. So you see there's a lot of bullish momentum on Google. There's two indicators that are telling us that this thing might keep growing. So there's a lot of hints that the bullish momentum is not done yet. There's not a lot of selling. There's a little bit of selling here. There's not a lot. There's still a lot of buying here though. And there's a lot of buying here. So I think tomorrow, the way I like trading is, I like having trading view because if it reaches 1,220, which is pretty much 50%, it will trigger an alert immediately. So tomorrow, April 5th at 1:15 p.m., every 2 minutes, which is what it says here, if Google crosses this value, right? I can configure crossing up, crossing down, so I like to just put it crossing, so if it goes down, I also know not to worry. I will get an alarm, so if Google reaches this value tomorrow, at that point I'm only $10 in the last day of expiration. So tomorrow I'm going to do a new video. I believe I'm going to make money on this trade. Another way of calculating probabilities, if I were to sell this 1,230, I could just pretend I'm selling the option right now. So if I'm going to sell, I would get paid $40, and the probability roughly is 11%, and this is what the delta value is. It's a rough delta, means how much it's going to move per $1 it moves, but it also helps you have an idea of what is the probability of this. So tomorrow there's a 10% chance I might lose money, but I would say the risk is lower because I have an alarm set. So what I like having, and this is how option traders, I think it's important, there you can still automate a lot of trading in your options. All you have to do is you have to sell the iron condor, you save it. So right now, if I want to close it tomorrow, I could close it at roughly half the price and just have a 40, $43, $44 profit roughly. I'm not sure what I'm going to do right now. I think it's a little risky because it's been growing. So Thursday, Wednesday, Tuesday, Monday, I think it's already 50% forecasted to be there. So what I like doing is, if the Elliott oscillator gets to this price, let's say Elliott oscillator has a forecast here 4 hours before, and this is why this indicator is so important, because before the action happens it will alert you. So tomorrow I'm going to upload a new video. I think there's a very good chance because it's still growing. I don't see a lot of pre-market movement. I hope there's not a big jump. So if there's a big jump in the pre-market hours, of course I'm sleeping, it's 1 a.m., 2 a.m. So if I wake up tomorrow and I see that Google is way up here, I might just close this trade. And that's the reason why I like trading. I've already made $45 from Google. I want to make another 100. So I do expect this to call within the range, but I just wanted to do this video to explain everybody how option trading is extremely, you have to be extremely precise. I've already said it's dangerous numerous times, but more than dangerous, I want people to understand that if you understand the risk, I believe it's a very good, profitable way. I believe with the combination of indicators and fundamentals and probabilities, if you have a visual way to know where the stock is going, you would have a great amount of advantage over people that are doing the same. Now, with the other iron condor that I have, that's one is for Amazon. If I check Amazon, Amazon is just absolutely going south. The Elliott indicator is predicting bear movement tomorrow, and actually the forecast it's $1,811. So this is not a forecast that I want you to interpret as an exact value. Nobody knows where it's going to close tomorrow. This is a range, the high and the low, but this close value, I'm gonna change it. It shouldn't even say close. It should say median. So this is just where it's going. So if it closes at 1,818, the median it's 1,811. All this is telling you is that it's this line here, the middle one. It's telling you that the bear movement it's expected to continue, and we can see that there's not a lot of momentum in Amazon right now. There's a lot of selling in this area, so I believe the Elliott forecast doesn't use the it's not related to this, not the same indicator, but I can use also two indicators to a little bit predict movements. So I believe what I'm going to do tomorrow, I'm gonna let this one expire. So if I check on the positions that I have right now, I'm gonna let this option condor expire. So these $137 should be mine, by Saturday. But I may close Google. It depends on the pre-market hours. Right now, today, I lost $10 on this guy. In Google, I could have closed it like yesterday and made more money, make maybe $5 more. So at some point, I need to be mindful. Is it worth it to have 2 days of constant, not constant monitoring, but just like being aware of a trade, or you have to see if you're worth to spend 2 more days, or if you just want to cash out right now, and you let go of $50 or $40 more in profit, $45 more in profit, but you have 2 days where you absolutely don't have to worry about it. I also made money on Cisco, Tesla, Google, JPM, Chipotle, Ulta, Amazon. The winner of this, the loser of this week is Lyft. I have like 7 shares. It's not much, but I really want to make sure that as an option trader and as a person that trades the market, you understand that it's impossible not to have losers. But right now, I believe if you're very good, and then if you use the Elliott indicators that we have programmed, these are very simple indicators, like very clear when you should buy, when you should sell. I'm even going to remove the moving average, just because Elliott Waves has very little to do with moving average. So I might remove this when I publish this add-on for MetaStock, just because it's not something that you necessarily like. I might keep just the 20, just because it's something useful. But I don't even believe the Elliott Waves should use so many indicators. We know, for example, with Google, the momentum is rising, and this is the reason why I may pull the trigger before I want to, because the Elliott oscillator is rising. But with Amazon, I think it's a much safer bet right now. Amazon has downwards momentum. We're going to see how the Elliott oscillator is decreasing, and how, if we check the MetaStock expert advisor, we can see that Amazon right now, it's in a bear wave. I might say it's actually bullish wave, but the expert advisor is recommending us to sell. The forecast, it's a decrease. It could decrease up to 12. I believe Amazon is going to close around here, around $1,816.35. So check us tomorrow for another video. Hopefully, we don't know if Amazon is going to go up or down. I believe it's going to close around here, 1,816, 1,817, somewhere around there. Check us tomorrow. Thank you for your time, and have a good rest of your day.